Why do so many people end up hating investing? It's not because it doesn't work. It's because the version they were taught is completely wrong. It's stressful, confusing, and feels like punishment instead of empowerment. Let's break down why this happens and what real investing actually looks like. From the very beginning, most of us get the wrong idea. We see stock prices jumping up and down like a roller coaster. We see influencers on social media bragging about their one lucky win. We hear stories from friends who lost a bunch of money on a random tip. So naturally, we start to think investing is just a high-stakes guessing game. That success is all about luck, not about patience or ownership. Then there's the myth that investing is only for the rich. This idea quietly pushes away regular, hardworking people before they even get a chance to start. But the truth is, real, effective investing was always meant to be built slowly, with small, consistent amounts over a long period of time. It's not about having a huge pile of cash to begin with. It's about building that pile, one brick at a time. On top of that, you hear that the market is rigged. You see scary headlines about corporate insiders and market manipulation. And it's easy to lose trust. It feels like the little guy can't win. But people miss the point. Long-term investing isn't about trying to win a daily battle against the pros. It's about owning a small piece of productive, growing companies and letting time do its magic for you. Social media makes this whole mess even worse. It sells the fantasy of getting rich quick. It creates totally unrealistic expectations. So, when real investing moves slowly, as it's supposed to, people feel disappointed. They feel like they've been cheated or that they're doing something wrong. They were promised a sprint, but investing is a marathon. And then the market drops. Because no one explained that ups and downs or volatility are a normal part of the journey. These drops feel like a personal failure. Beginners panic. They sell their investments at the worst possible moment, locking in their losses. And then they blame investing itself, not the fear that drove their decision. It's a self-fulfilling prophecy of failure. Many also fall into the trap of thinking they need to find that one perfect stock, that single needle in a haystack. This turns investing into a stressful intelligence test. But the entire concept of diversification was created for one reason. Nobody can predict the future with 100% accuracy. You don't need to be a genius. You just need to be sensible and spread your risk. Following hot tips from friends or influencers without doing any research is another classic mistake. When those investments go down, it doesn't just feel like a financial loss, it feels like a deep personal betrayal. And trying to time the market, jumping in and out constantly just turns investing into a stressful, full-time job that will burn you out faster than you can say buy low, sell high. These common behaviors of trading, not diversifying, and especially using leverage or borrowed money, magnify small mistakes into huge, painful losses. These experiences leave deep scars, making people swear off investing for good. Convinced it's a rigged game designed to take their money, they see red numbers on a screen and confuse them with real, permanent failure. They judge their progress over weeks instead of years. They get overwhelmed by complicated financial jargon and sometimes get bad advice from advisors who are more interested in sales commissions than their clients' well-being. All of this makes investing feel dishonest and impossible. And perhaps the biggest mistake of all is investing without a clear why, without a specific life goal, like retirement, a down payment, or financial freedom. Every dip in the market feels scary and threatening. But when you have a purpose, these fluctuations are just noise on the path to your long-term destination. When you strip away all these misunderstandings, what is investing, really? It's about owning assets, staying consistent, controlling your emotions, diversifying your risk, and letting time do the heavy lifting. When you see it this way, investing becomes calm, boring, and surprisingly powerful. It starts to feel less like a gamble and more like an act of quiet self-respect. It's a way of slowly, patiently building security, freedom, and true peace of mind, not chasing a quick thrill. Once you understand this, you don't just stop hating investing. You finally start trusting it. Thanks for watching. If this helped clear things up, consider liking the video and subscribing for more content that makes finance simple. See you next time.